Good evening, everyone. My name is Gabrielle, and welcome to another episode of Let's Talk Money with Friends. Every Wednesday, we have the privilege of coming to you to share really pertinent information about money, life, and everything else. I always say that money encompasses everything on this show, and we like to talk about everything, all money related. I'm always looking at because my vision board is here, and I want to make sure that I'm checking all the boxes, and the topics that we talk about are relevant for you. So tonight's topic to me is very important because we're going to talk about credit. We said the topic tonight is your credit score matters. Why does it matter? Because you've heard it said that cash is king, but to me, credit is queen. If you don't have excellent credit score, it's really hard to achieve some of the personal and financial goals that you have, unless you're wealthy and you have all the cash that you need. But most people don't. That's why it's very important that you try your best to secure, maintain, and establish excellent credit. Because at the end of the day, if you're trying to find an apartment, you're trying to find a job, or even start a business, or go into college, because I know this is the graduation time. So many kids are heading to college. And guess what? Your credit score really is going to make a difference. So without further ado, I would like to welcome my guest, who is a credit expert on the show tonight. He's going to really go over some of the best practices that you need to partake in order for you to establish and maintain excellent credit score. So without further ado, why don't I welcome my guest, Carlos? Thank you so much for being on the show tonight. Please give us take a little time to introduce yourself and let us know about your organization, where you work, and also why you feel like this topic is an important topic to discuss tonight on Let's Talk Money with Friends. Your credit matters.
Yeah, absolutely, Gabriella. Thank you for having me. And hello, everyone, to all the listeners, everyone who's able to tune in and, just pay attention to this really important topic today. I appreciate you all making the time to have me. So my name is Carlos Moreno, and I work for a nonprofit organization called Empath, Economic Mobility Pathways. It was called Crittenton's Women's Union, but we changed our name because we don't just serve women, and we're not a credit union. And so our goal is to help move families out of poverty. That's our goal. And we do that in a couple of different ways. But today, what I'll be talking about is really the importance of credit and why credit matters in today's age. And so I help families with building their credit, improving their credit. I help folks pull their credit report, and we talk about all these different strategies to help families move forward. So that's what I do on a day-to-day basis. I love what I do. I can sit and talk about credit all day, but I won't, because I know we have a limited amount of time today. But I'm so thrilled to be here today, Gabriella.
Yeah, definitely call us when we're having a conversation.
And I think the other thing that I also just wanted, I'm sorry, my internet's cutting in and out. But the other thing that I was gonna say, the other thing that I was just gonna say is that the work that I do with the families each and every day, because it's around credit, it actually relates to today's topic. So we can jump right in and talk about credit.
Yeah, definitely. When we're having the preliminary conversation the other day, I remember thinking, oh, wow, somebody who's interested in talking about credit, because again, it's foundational. If you don't have good credit, it's gonna be very difficult. Or if you don't have credit at all, it's gonna be very difficult to get started. But before we go to that point, let's talk about the fact that some people have had credit and they didn't get to manage it properly. So what do you do? How do you stop punishing yourself for past credit or financial mistakes? Why is it important to do that?
Yeah, I mean, I think the first thing to do is to give yourself permission to say, we're all human and no one is perfect. And, when I think about credit,
I am having a hard time hearing you. Maybe you could go
to
off
me,
maybe just do the audio.
game. And if you know how to play it, if you know the
Carlos, we cannot hear you.
rules for credit, if you know the different factors, I
Let me text you.
think for a lot of
Okay.
can
Carlos, we cannot hear you, so perhaps you can go off the camera and go on the radio only. So we are live, so we have to keep going. Definitely, we are talking about this topic here, very important topic. Hopefully, Carlos will call us over the telephone, and we'll have the conversation audio only. But we just want to reiterate that the reason why we're having this conversation about credit, because we know it's so important. It's foundational. At the end of the day, if you build in a house, you need to have a foundation. And if you don't have a foundation of good credit, especially as a young adult going all the way to adulthood and also maybe older person, if you don't create that foundation, it's going to be very difficult for you and your family. Carlos is coming back. We just want to say again, the question I had asked him was, what do you do if you've made mistakes? Who hasn't made any mistake in their lives? We all have made mistakes. So it's very important to know that if you've made mistakes, if you let's say you are in college, many of you are graduating from college right now. Let's say you were in college and you had misused your credit cards. It's very important that you learn to forgive yourself, because no one is perfect. The key is to get going and get started from where you're at right now. So Carlos, are you on audio? We can hear you.
I am on audio. Can you hear me okay?
Yes, I can hear you okay. I think this is perfect, because I think it's probably best to go this way. Technology for you, right?
That's technology, and you know what? It's just like credit, because sometimes if we don't have the right resources, we don't have the right tools, things just don't work out for us. And I think for your question earlier, Gabriella, I was just saying that I think it's really important that sometimes we win and sometimes we lose with money, but we can't lose ourselves. And I think we need to know the resources and make sure that we're learning every single day. And hopefully today, there might be something that I can say or something that you can say, Gabriella, that your listeners can take away that they can implement in their own life when it comes to credit. And I think that that's really important.
Yeah, we wanted to address this question because, again, you work with families every day and they're coming in and you see, you know how downtrodden people can get when they've made mistakes. So it's very important that we let you know, give yourself an opportunity to move forward, to forgive yourself for past mistakes. Because at the end of the day, we've all been there. I'm one of them, and I'm sure we all can attest to the fact that we've made mistakes in life. You don't want to keep beating yourself up for something that you can move away from and move forward and towards greater and better pastures. So with that being said, we just want to, the next question that I have is, obviously we're saying again here that credit is important and that credit is foundational. But I've heard, I know people who are perhaps watching now, especially folks from certain communities, who they've heard it said, do not use credit. Do not use credit. It's bad to use credit because folks are afraid of the idea of having credit or using credit. What do you say about that?
Yeah, I mean, I think there's, money is such an emotional conversation, first of all. And I think there's different cultural contexts when it comes to finances. There are some cultures that don't believe in appreciation, and getting appreciation from investments. There are some cultures that don't believe in borrowing money, and one isn't wrong. But I do want to say that in America, to be able to make big purchases like buying a vehicle
Correct.
or finding an apartment,
Mhm.
just to be able to have shelter, to have housing, to go to college. I mean, you said it earlier, Gabriella, to go to college, to start a business, you need credit. It's not something that's just nice to have. You actually need credit, because a lot of those avenues, they require money to be put down. And the interesting thing about credit that I think a lot of people forget is that it's not just about that 3-digit number,
Mhm.
just your credit score. Credit was originally created to assess risk, whether or
Correct.
not you can pay back money that's been borrowed to you, that's been lent to you, excuse me. And so I think we need credit in order to make those big purchases, and we really need to think about credit in a different way, that
Mhm.
credit actually gives us the ability to improve our lives,
Correct.
whether it's to start a business or to buy a home or even to go to further our education. We need credit to be able to do the things we want to do in life.
Yeah. So the key is to use it responsibly, right?
Absolutely.
Yeah, the key is not to run away from it, if you've never had it before. The key is to learn how to use it in the with the level of responsibility that you want to use anything that is valuable, anything that is
Hmm.
important to you. So you had mentioned that in order for you to go to college or get an education, recently we were talking about that offline. There was a survey done by
Hmm.
the Federal Reserve, not recently, actually, it was done in 2015. And I was reading in the banner, the local newspaper here in Boston, that they are doing a continuation of that same study. The Federal Reserve did a study way back and found out that the wealth gap, so it was called the color of wealth, the wealth gap
Hmm.
between white families and black families, very wide, the disparity very wide, because for black families about $8, and then you have for white families their net worth is about $247,000. That was in 2015. So credit, what are some of the ways credit has been used as a tool to qualify us in creating wealth and opportunities?
Yeah, I mean, I think credit helps us credit helps us all start from the same starting point. And I think when we think about other financial factors, income, how much money, a white family makes versus a black family or a Hispanic
Mhm.
family or an Asian family, there's a big difference there. When we think about savings, how much savings, um, you know, a white family has versus a black family, there's a big difference in this study that you're mentioning, Gabriella. I mean, 7 out of 10 Americans right now can't afford a $500 emergency. So
Hmm.
if the car breaks down, if they don't get paid till next week, and something comes up, and something usually does come up, um, typically
Yeah.
immigrants tend to suffer a little bit more. And so I think credit
Right.
gives us that buffer sometimes where, we're not necessarily living paycheck to paycheck, and we have something that can sort of get us by. Credit also gives us the opportunity to be able to afford luxuries, to be able to buy a car. We might not be able to afford it right now, but it
Mhm.
gives us that ability to be able to pay over time, and at a comfortable rate that works for us. And so I believe that on a large scale, if handled responsibly, credit actually gives us all the same level playing field to start from. Now, some people have, they might run into troubles in terms of dealing with credit, but you can always improve your credit over time. But I feel like credit actually gives us the opportunities for some of those things that we don't necessarily have access to right now. Like generational wealth. A lot of us just don't, we're not grown with a silver spoon. And so I think credit gives us that ability to start a business. So later on, we are able to increase our income and be able to, make progress down the line.
Yeah. So many opportunities. So if you're watching here, we're talking about the importance of credit. Your credit score matters because at the end of the day, your credit score is foundational. Because right now we were talking about it offline, Carlos. In order for you, and you just mentioned it again, in order for you to get the job of your dream, even if you graduated with those degrees, it doesn't matter how many degrees that you just was rewarded. If you don't have good credit, that could be a hindrance. It will keep you from being able to get into that industry, especially if it's financial services industry, because they have to pull your credit to see if your character, that's how they measure your character, if you are suitable, if they're willing to take a risk with you. I know as a person who worked in financial services with industry like with regulatory agencies like FINRA, if you don't have good credit, they're not gonna take you on as a member. So it's very important. Even attorneys. I know a friend of mine graduated from law school. He had his law degree. He passed the bar, but he couldn't get appointed or he couldn't get his license because he had to fix his credit first. So it's very important to understand that it really could be a hindrance, right? Could hold you back.
Yeah.
And also to cost you a lot of money, lack of credit or bad credit.
Yeah.
Because with insurance, your car insurance, your health insurance, your homeowners insurance, right? Sometimes you get surprised when you see certain things that you think, oh, why they're pulling my credit to qualify me for this, but they do. So credit, it's pulled for everything, right? Right?
Yeah. It really does matter, and it makes a big difference. I think all those examples that you just gave, Gabrielle, is spot on. So I couldn't agree more.
Yeah, it's very important. So for those people who are not familiar, because there's a spectrum of folks watching the show, what is a credit score and a FICO score? What does it mean when you have good credit or bad credit? Can you explain, like, when we're talking about credit, what exactly is credit? And what does it mean to have good credit or bad credit? Yeah.
So a credit score was originally created by Fair Isaac Corporation, FICO, FICO. So when it was originally created by this company, banks wanted to use it. And this is, years ago. This is before I was born. But banks created, the system was created by FICO, and banks were able to use it. And the reason they were able to use it is because they wanted to know who was going to be able to pay back the loans, the mortgage, the auto loans, the personal loans, the school loans, who was going to be able to actually pay this back. And there were a couple of criteria that were originally built into the credit score. Your character, and your ability to pay back this loan, your capacity, meaning how much debt you can actually take on. And so, when someone says credit, what I always tell people is, if you don't take anything away from what I say today, take away this, that credit is just an assessment of risk. That's all it is. And credit is broken up into two different parts. So there's your credit score and there's your credit report. And the way that I like to explain it is, at some point we all went to school, whether it was middle school, elementary school, high school, college, or higher education. We all went to school. And so when we went to school, there was different things that we did to be able to perform in class, whether it's math class or, English class or geography, whatever the class was. There were things that you did. There was homework that you turned in. And at the end of the semester, you got a grade. You got a B, you got a C, you either passed or you failed. And so when you think about credit, think about it that way. So your credit report is everything that you're doing, in class that's being measured. And at the end of the semester, there's a grade. And the grade with your credit score is between 300 and 850. So the lower you are on that scale, the more risky you are to the bank. The higher you are on that scale, the less risky you are. So those are the two pieces when it comes to credit. What I love to tell folks is that I actually encourage everyone to know what their credit score is, but actually pay more attention to your credit report. Because if you know what makes up the credit score, then you're able to continue to increase your credit score over time. And it's just like in school, if you study for what's going to be on the exam, you'll pass the exam. And so that's what credit is. And there's a whole bunch of different things that you can do to improve your credit over time. But really, when it comes to credit, those are the two things. In your credit report, it's basically that. It's just a report. You can pull your report anytime. I always like to tell folks to go to annualcreditreport.com. That's one of my favorite websites, and you're able to get a credit report, not a credit score. You have to pay for that on that website, but you can get your credit report on that website. But there are other resources where you can track your credit score. But that's the difference between the two.
Yeah, thank you so much for this information. I just wanted, as you were explaining what it takes, for you to get that score from 300 all the way to 850, and you were using that analogy of going to school, and you were getting with your report, you're getting your grade. I just want to say again, we know everything in this country or all over the world. There are errors, right? Errors could happen, just like you could have submitted your papers at school and your professor never got it, so they gave you an F for a grade that you should have gotten an A for. Or maybe you have issues with the professor. The professor doesn't like you for one reason or another, and they decided to not give you fair grades. So it's so important to know that the credit report, it's used to measure who you are, but many times too, it could be used in a way that's not right. So it's your job to make sure you monitor you and you stay on top of it. And you had mentioned that it's so important to do. So how often should you do a financial checkup? Just like how often would you need to go speak to that professor who's saying like, Gabrielle, I didn't get your report. Gabrielle, I didn't get this. Gabrielle, or you feel like, wait a second, it's gonna be the end of the year, and I need to know what my grade is gonna be. How often should you go to your professor or check your credit report and say, let me see what my grade is gonna be at the end of the year. I just want to make sure my credit is up to How do you do that? How often should you do that?
Yeah, I mean, when I was in school, I would go to my professors, every other day. So that might be too much, but I think when it comes to your credit, so the three major credit bureaus are Experian, TransUnion, and Equifax. Okay, and so the way to think about that is that let's just say you have a credit card from Macy's. Okay, Macy's is reporting to those three major credit bureaus. There are more, but those are the three major ones. And so every month, Macy's is reporting to that. They're reporting how much money you're using, and whether or not you made your payment. And so, you just want to stay on top of that. So because there's three major credit bureaus, on annualcreditreport.com, you can pull your credit report once every 12 months from each one of those companies. So from Experian, once every 12 months, TransUnion and Equifax, once every 12 months. So what I recommend doing is spacing it out. So
Mm-hmm.
pull, and it doesn't matter which one you pull first, but pull at least one today, and then in 4 months, pull another one, and then in 4 months, pull another one. So over
Correct.
the course of a year, you would have pulled all three, and by the time you pull the last one, it'll only be 4 months until you can pull that first one. So that's what I would recommend, pulling your credit report at least every 4 months. I would also say, in addition to doing that, there's so many other credit monitoring systems out there.
Mhm.
Credit Karma, Credit Sesame, there's a whole bunch, and even the credit bureaus themselves have it. So Experian, if you go on the
Mhm.
Experian website, you can track your credit report and your credit score, your FICO credit score on the Experian website for free. And I know some of the other credit bureaus do that too. So in addition to pulling your credit report every 4 months, I would actually sign up with a company like Credit Karma or Experian, and uh, you can go on there every single day if you'd like.
Yeah.
It doesn't upload until every 30 days,
Yeah.
but that's a good way to see what's going on. The other thing is they will actually send you alerts. Um, on Experian or Credit Karma and say, this account was just open or this account was closed. Your credit score has increased or your credit score has decreased. And so it's almost like someone else. It's like a coach who's there with you every single day saying, hey, here's what's going on with your credit report. So I would say sign up for annualcreditreport.com, check it every 4 months. And on top of that, get a service like Credit Karma or
Yeah.
Experian where it's tracking it for you.
Yeah, and not only that too, I know my local bank that I use, Credit Union, they have that service. It's available online. If you
Yeah.
have online
Yep.
banking, you can actually click for your credit report. I know my bank uses TransUnion. So,
Yep.
check to see if your bank provides a service because it's like your report card. I know right now, once upon a
Yeah.
time when I was in school, you had to wait till the end of the quarter to get your status,
Right.
to get your report. Nowadays, the kids that I know are in school now, they can get weekly reporting, like
Yeah.
the teachers are reporting to their parents or to a website
Absolutely.
online, what you doing, how you doing, what needs to improve. It's so important because
Yeah.
if you know, you can fix it. Because at the end of the day, you don't want to be
Absolutely.
surprised. It's time for you to
Yeah.
graduate and you don't have the grade. The same way, it's time for you to own a home.
Absolutely.
It's time for you to go for that job. You're graduating from college
Yeah.
and you're looking to pursue a career in financial services, and you're realizing that, oh,
Yeah.
my credit score is 550, which is basically an F. And they're asking you
Right.
for a D or
Right.
an A, which is like, more like
Yep.
700 and up. So it's very important. The reason
Yeah.
we're having this conversation today about credit, because we say credit is foundational. It's at the very foundation of
Hmm.
any house, financial house you want to build. So in order for you to
Absolutely.
know how to build that, we have to have the conversation. And we're saying if you've made mistakes, forgive, forget about that. Let's start from today, So my next
Absolutely.
question is, how do you, I mean, you talked about checking your credit and do all that stuff. But what if, just like with school, I like that analogy, just like with school, you look and you're like, oh my gosh, I just got an F and I need to get an A for this class, or I need to pass this class. What do you do to improve your credit if you have questionable items on your credit report that needs to be fixed? What should you do?
Yeah. That's a good question. I mean, the truth is, there's not a single answer that's going to fix it for everyone because everyone is in a different bucket.
Yeah.
But what I would say is that to me, there's usually like three categories. There's someone who um, doesn't have credit and is trying to establish credit. So that's kind of like the new folks, someone who's never had it and they're trying to establish credit. Then there's someone who maybe had credit in the past and something happened, and now that they need to reestablish their credit. That's the second bucket where I feel like a lot of people fall under. And then the last bucket is really around someone wanting to continue to build the credit. I think the first place that I would start with all three of those buckets, the first place that I would start is pull your credit report. You got to know what's going on. I think sometimes it's really easy for us to just kind of like walk blindly and not know what's happening. So pull your credit report. So if there's anything that you do today, pull your credit report. Even if you pulled it last month, pull it today. Just see what's going on and make sure, just like you said, Gabriella, make sure everything looks correct. And that's everything from your name, that's everything from the number of accounts that you have. So that's the first place that I would start. The second place that I would go into is if you fall in that second category, if maybe you had a situation and life happened and you're in a place where you need to rebuild credit, I wouldn't think about the number. Okay, let's focus on what you have control over. And I would really, I would take your credit report, and sometimes it's like 8 to 15 pages. It can be very long. So what I would do is I just grab a simple piece of paper and I would just list out your debts. Just list them out. How many credit cards do you have? What's the balance on the credit card? Just list them out. Do you have collection account? What's the balance? List it out. And just put it on one page. And what you're doing is you're training your brain to actually understand what's going on. So you're not looking at 15 pages. Now you're just looking at one. Once you do that, I would prioritize debt. So for a lot of families that I work with, they have a lot of debt, meaning they have credit card debt, they might have collections account, they might have some student loans, they might have a car loan. And so what I asked them one simple question, and I would ask your viewers to do the same thing. When you list out all your debt, ask yourself this one simple question: which one of those debts keeps you up at night?
I know.
And then I would start there. If it's that credit card that just has a big balance on there, and that that Capital One account is really bothering you, start there. And let's create a plan. Let's just focus on that Capital One card, and let's just create a plan, and then work your way through it. So that's kind of like the blanket statement I would provide. And then there's other people who have good credit and they're continuing to build credit. For the people that fall in that third bucket, I would say the biggest factor to your credit score is payment history. Just making on-time payments. And if you want to continue to build your credit, just make on-time payments. And the reason that's so important is because that makes up 35% of your overall credit score. So there's 5 different factors, and payment history, just making on-time payments, makes up 35% of your score. And so, if you can do anything, just make your payments on time. And try not to use too much credit. So if you have a credit card and there's $1,000 limit, try not to use more than $300 at any given time on that card. Because the second thing that makes up your credit score is what's called credit utilization, which is basically how much credit you're using. That's 30% of your score. So just between on-time payments and not using too much credit, we're talking about 65% of your score. That's a big piece right there. So as long as you can do those 2 things, you should be fine.
Yeah, definitely, Carlos. I think it's so important that, again, if you find yourself in a situation and you're like, I don't have, like you just mentioned, I don't have any credit, you need to establish credit. How do you do that? Because again, we're saying it's foundational. You're gonna need it in order for you to build your financial house, your personal finances. You're gonna need it to build to have a business. If you're thinking about owning a business, you're gonna need it to own a house. You're gonna need it to go to college. You're gonna
Yeah,
need credit for everything. If you don't have credit yet because
absolutely.
you've never tapped into it, because you were told by somebody, do not use credit because it's scary. No, you need to set up credit. So the way you do that, as you
Absolutely.
mentioned, yeah, establish credit. And I know I was talking to one of the guests who came to our show a while back. He said one of the easiest way to set up credit is if you have an account, a bank account, go to your bank, your preferably your credit union, your local bank, and ask them for secured credit cards. Get a secured
Hmm.
credit card so you can get started. Get one, but you're gonna need multiple later ones in order for you to build your credit. Get a secured credit card. You
Hmm.
you, you would agree, right, Carlos? And the next thing would
Yeah,
be,
I would agree.
do you have older children yet, Carlos? Because I know he had mentioned to me that when his son turned 16, I think he said, I put him on as a user on my card too. That's another
Yeah,
way. If you have a friend, a
yeah,
spouse, a family member who wants to help you build credit, they can actually put you on
yeah,
their own credit as a user.
yeah,
And you don't have to have the
yeah,
credit cards. You don't have to have access to a credit card that you can use, a 16-year-old, God forbid. You don't want to give them access to
yeah.
a credit card to use,
Right.
but you can put them on as a user so you could help them establish credit. Because I know my friend who has a
Yeah,
daughter in college now, she already has a 700 FICO score because her mother has her as a user on all of her credit cards. So that's
yeah,
how one
yeah,
way you can establish credit is to have somebody help you. But if you don't have anybody to help you, you can start by going to your local bank and say, you know what? I don't have any credit cards. I would like to set up a secured credit card. And then they'll let you put in,
yep,
I don't know, 500, 200, $1,000 into a separate account, and they'll give you a credit card. What's going to happen when you get that credit card and
yeah,
you use it every month? Guess what? It's going to be reported as a
yeah,
credit usage, and it's gonna help you build credit. You gotta build credit. So I just want to say
absolutely.
one thing you said about, like, when you look at your credit report and you have issues and you
Hmm.
need to tackle them quickly. A
Yeah,
little testimony. Years ago, I had purchased something and I didn't like it, and I returned it, and these people decided to report me, and it was reported on my
mm,
credit. Like, it was like $230. But because I was so angry
hmm,
about the transaction, I said, I'm not gonna pay it. I'm not gonna pay it. So I kept it there. It was on my credit
mm,
report. And these people were
mm,
long gone. They didn't care. They reported it and they moved on, right? But because I kept
yeah,
that $250 on my credit report, it kept on affecting my credit. It kept affecting and
yeah,
pulling my credit down. And I was like,
hmm,
you know what? Forget them. Let me just pay off. So I called the collection company and I said, you know what? I want to pay
hmm,
that 250. It wasn't something that I owed, but you know what? At this point, I'm tired. I want to pay it off because it's still on my report after all these years. And they said to me, okay, give me your checkbook and blah, blah, blah. It was done. I kid you not,
yeah.
Carlos. The next month, my credit score went up for 40 points.
Oh wow. Okay. Yeah.
My credit
Yeah.
score,
I
because
mean,
a collection item on your credit, it could be $50 all the way to $100. For
yeah.
40
Kudos
points.
to
Yeah,
them, and because I think at that point, it's they don't care. They're
yeah,
collection companies. They're in the business of making money, and it's affecting us.
yeah,
And until we do something about it, it's just gonna stay on there and hurt us.
yeah,
So yeah, I think that's a really good example,
yeah,
Gabriella, that you shared. That I think, like, just pulling your credit report. Not only is it important just to check what's on there, for identity purposes, like just to make
mhm,
sure no one is using our information. But it's
correct.
also good for us just to make sure that we're not overpaying for something. So yeah, I
Yeah,
think that's a great
because
example,
I,
and
I
I would
think
encourage everyone to do that.
Yeah, because I think literally I had paid so much more than $250 because the fact that it was pulling my credit every time I needed to get
Hmm.
credit for something. Again, the credit score is being used from 300 all the way to 850. That's your score. When your score
Right.
is not at
Right.
750 and higher, you get in charge a premium, an extra
Yeah.
fee for not having
Absolutely.
stellar credit. And I think that 250 cost me a lot more money. When I decided, you know what,
Yeah.
let's not play games with these people. Let's get rid of them. It really helped me. It pulled me out of a situation and got me into a much better place.
Yeah.
So I would say
That's
definitely the reason
beautiful.
we wanted to have this conversation, because on Let's Talk Money with Friends, we say money encompasses everything. And how much more
Yeah.
should we talk about something that really impacts your money? Every single day, whatever
Yeah.
you're paying for is being impacted by your credit cards, your car note, your health insurance, your life insurance,
Yeah.
your car
Everything.
insurance, your work, how you're able to get a job or not. Because I know people who had job rescinded, they were offered an opportunity. And then because the credit was
Hmm.
pulled and it was questionable, meaning bad, the company rescinded the job saying like, I'm sorry, we cannot hire you because your credit
Yeah.
is not up to par. So it's very important
Yeah.
that you do everything that you can. But using the analogy that you were using, if you are in class and you
Mhm.
have a professor who's not treating you right, you gotta stand up and ask why.
You got to stand
That's
up.
why.
Yeah.
If
Absolutely.
you have credit
Yep.
score that's not being used properly, you have to ask questions. You have to make sure you verify. And if you don't know how to do it, get a friend, go to an
Yeah.
organization like Impact who can help you really take a look at your situation. Would you agree? What's your final word for tonight, Carlos, regarding this important topic of your credit
Yeah.
matters?
No, that was beautiful, Gabriella. I mean, the only thing that I'd like to say in closing is just take action. Right now is the time to. There's no better time than right now, right? And I think we just have to take action. So if you haven't pulled your credit report, do that today. Don't wait.
Correct.
Do that today, and at least take the first step. I know it can be scary. It can be very emotional. Take the first step. And the second thing that I would say is that it's not about where you are right now. It's
Yes,
about where you want to go. Now let's get
definitely.
there.
Yes.
Okay. And so, I think this is a great continue to watch the webinars,
Yeah.
continue to participate because I think this is a great community with really good information. And again, I just want to thank you, Gabriella, for having me and being able to talk with friends about this very important credit
Yeah.
conversation today. So thank you.
Yes, thank you, Carlos, for coming. Thank you. I want to thank Joel Schwartz, who referred you to me. Joel is a friend. He's
Yeah.
been referring so many great people to me because he believes in this podcast or the show that we do, Let's Talk Money with Friends. I believe
Yeah.
that. I know
Definitely.
this conversation, I had it with someone several years ago and it changed my life. And I'm hoping that you
Mm,
will hear this conversation tonight and you will go and do something. Not tomorrow, do it tonight. Go tonight, pull your
yeah.
credit online, freecredit.com, freecreditreport.com. Go to Credit Karma or any or your bank. Find out if you can monitor your credit
Right.
that way. Maintaining and a good credit is imperative. It's important because of all the reasons that we just
Absolutely.
mentioned. But also, when you have something that is
Absolutely.
valuable, you need to safeguard it. You don't just let anybody use it. Be very responsible with your credit because it's your own personal asset. Just so it can help
Yeah.
you, not having it will hurt you. So you don't want to just give it access to anybody to use it. So
Mm,
yeah, do not give up. If you've made mistakes, forgive, and move on. Credit
move
will open
on.
doors
Yeah.
for you. It matters. Your
Absolutely.
credit score matters.
Hmm.
So thank you so much for your time. Please share this show with your friends, family, and everybody that you know who would like to learn about how important it is to have credit. Yeah, to have good credit and to maintain good credit. Share, tag, make a comment. Let us know your personal experiences as well with credit. I just shared mine, and I have so many more stories, but I'm so grateful that I heard from one person about what to do to forget about my mistakes and to move forward. And now I'm in a much better place because I listened. So I hope and you do the same tonight. Thank you so much for your time, Carlos. And thank you everybody for
All right.
watching.
Thank you.